On today's episode of the Crowd Forecast News Show, we talked about the S&P 500 projections for the week, possible Fed actions and what that could mean for the markets and inflation, longer-term projections for the next few months, thoughts on the bond market and currency market trends, as well as the symbols for GE, Macy's, TLRY, and gold. And now here's the episode.
Okay.
Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News for September 19th, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 359. So my name is David Kosmeter. I'm the creator of TimingResearch.com, and today I've arranged for Markus Gabel of DowHowTrading.com, Wally Olopade of RightSideTrading.com, and Michael Filighera of TradersHelpingTraders.com. And Michael is going to be moderating today, and you should be seeing his screen right now. So I'm going to go ahead and turn it over to him.
Thank you, David, and good afternoon, good evening, good morning to everyone. I think we got the whole world covered on that statement. I'm going to switch my screen over to the S&P and go up to, let's go to the daily chart. We'll start there. So first thing we do is we go around and first of all, good evening to our friends from Bavaria, from Zurich. Wow, Europe is well represented today. How cool is that? I love it. Is it because is this, oh, these are all coming to watch Marcus. That's why.
That's why.
Perfect. Welcome. How we normally run the show, we'll do a kind of a round robin, and I'll start with Wally and then Marcus, and just give us a quick introduction of who you are and your company. And then we'll move on to first Wally, and then Marcus, and then myself, and then we'll come back and we'll start with the S&P.
Absolutely. Well, good morning, good afternoon, good evening, like Michael said. My name is Wally Olopade. I am with Right Side Trading. Right Side Trading is what I call a quantitative and technical analysis firm. And so what we focus on predominantly is studying data. We do no fundamental analysis whatsoever. We don't follow the news. And the reason why we call our company Right Side Trading is because we use the data that we see on a day-to-day, week-to-week, month-to-month basis to anticipate what we expect to happen on the right side of your chart. And so the goal is to not trade in hindsight, coulda, shoulda, woulda, but say, okay, based on what we see right now and the current data we have, what is the best options for us? And when I say options, I'm not talking about like trading options, but like what is the best trade that we can take on, and where do we expect market to move? So most of what we do is market direction more than anything else. And so that's what we do.
And thank you very much. And Marcus.
Yeah, wonderful. Good evening in my case, good day in your case, good morning wherever you are. I'm really proud that you're having me here in this show the first time. Thanks to David, thanks to you guys. So my English is a little bit German colored, so I hope you understand what I try to say. So I'm in trading for 23 years now. So I'm not a young trader. I'm really, I have my own experience in trading for 23 years now. I lost everything in trading. I lost my family. I lost my money. I lost my self-confidence, but my teachers and my mentors brought me back. And after 7 years of self-studying and trying to figure out what's going on the right edge of the chart, I got my teachers, my mentors, and in the last 20 years, I have have 4 mentors. They still teach me, and since 16 years, I have my own company. It's Dow Trading. It's a combination between the right know-how about the Dow approach. And as all know, the Dow approach is 150 years young or old, and it's still trend following. So my company could also be right edge of the chart, because we don't work with fundamental data. We don't work with news. That's garbage. We're on the right side of the chart, and we have to trade what we see there. So, and we have to understand as a trend follower, we are trend followers like the famous traders in USA also. We are trend followers. We don't work with any indicators, just the naked chart. And as I used to say to my students, the chart and you. That's everything what you have to do. In the end, it's a game of math and it's probabilities. And what you have to do is to stick to the rules under all circumstances. Whatever it takes, you have to stick to the rules. I hope you have rules. And what we do is to work with this Dow-Howe approach, with this, you have a trend and then you come out of the correction and then you follow the trend as long as the trend is running. So, and this is why trend following, especially here in Europe, guys, not so well known because it's not sexy, because it's based on pure logic, which means math is logic and has nothing to do with opinions, with predictions, with interpretations, analyzing something like this. It's just follow the rules. And this is what the human being doesn't want to do because a human being wants to have the control all the time. Right. But in trading, you don't have the control. You can only control yourself. And this is what I teach my students all the time. Every day we are in 4-hourly chart and a daily chart. Actually, I have 100 students under my personal control, and they are fighting with me. And this is what I'm doing here in my Dow-Howe company.
Well, thank you. That's fascinating. Thank you very much. And you are located in Europe?
Exactly, in Germany, in the country Bavaria.
Oh.
Yeah, this is the biggest.
Somebody else coming in from Bavaria.
Yeah, I brought some followers with me.
Good for you. Thank you very much. And I'm sure David thanks you as well. My name is Michael Filighera. I am not located in Europe. I'm located in San Francisco. And I have been trading in the market since 1979. Prior to that, I was still pretty young and I was trading penny stocks. That's my grandfather taught me how to trade penny stocks. In any case, I have traded options as a market maker here in San Francisco. I've traded on the London Traded Options Market, the European Options Exchange in Amsterdam, and the DTB, the Deutsche Terminbörse in Germany. And then I came back here to the United States, came back to San Francisco. As the market started to really slow down and go more electronic almost by the day, things began to really thin out on the floors, when the necessity to come in and to stand in a pit of people and get pushed and shoved and yelled and screamed at no longer became appealing when I could sit at home behind a comfortable desk and have all my own stuff right there. So, in any case, I then left the floor, gave up all of the exchange memberships and came and started to trade from home. I guess it was about 2013 that I made a decision to day trade. And that came about because I was really kind of tired of the volatility, not so much as it was now. Back then, it was more of a surprise, and how it affected your positions almost on a daily basis. So I gave up a lot of things, came over and did this. So first of all, welcome to everyone again. And now I just want to go and figure out, with the S&P future opened up at 38.89 this morning. So our first question that goes out is between now and Friday's close. So 38.89 opening to this morning. Where do you expect or would you think the S&P is going to be by Friday, above or below today's opening? And then at the same time, if you wouldn't mind giving us a probability score on that you feel. And we'll start again with Wally.
All right. Yeah. So the first answer is that I expect it to be below today's opening, and the probability of that, quite frankly, I would say maybe 70%, if I was to be honest. 70% probability And that's only because I do see some bullish signals, but they're not strong enough bullish signals. So the mere fact that those bullish signals appeared on Friday, I was like, it shouldn't be. So,
Yeah.
but overall, I still think the market should be down. So that's why I said that.
Down with the 70%. Okay. And Marcus.
I see it the same way, because we have a really clear downtrend in S&P 500, and the probability for a trend continuation, as we know, is 70%. So I'm speculating, and I think we see lower prices until Friday, around about 3,800, or at that price level. But at least we see lower prices until Friday, because the trend is strong short. And we had this bad impact last week on Tuesday with the bad inflation numbers.
Right.
And so all traders are pushing the selling button. So,
Yes.
And it was interesting because it was a trend. It was a lovely downtrend. And the correction up until last Tuesday was a long correction. So then that was the balance candle of Heikin Ashi, because I work with Heikin Ashi, and there was a wonderful balance candle last Tuesday, and that was the great signal to go short, or in S&P, in Dow, and in Nasdaq. So, and trend continuation, as Wally said, 70%. So I'm on the short side also.
Thank you. Well, so am I. Surprise, surprise. Mine is based on Elliott Wave. As you can see on my chart, is just chock full of Elliott Wave, and this is my current count for the S&P. And right now, I feel like we're kicking off in an intermediate third wave, which got off to a great kick last Tuesday. And so I'm still now considering that we may get a rally today, tomorrow. But then on Wednesday, that's Fed Day. So we have, of course, that announcement. And as I discussed in my trade room this morning, I don't know what you guys feel, so we're just going to pass it back around again, that I think that the surprise to the market, I think everyone is now factoring in at least 3/4 of or 75 basis points for the hike. The Fed's pretty much made it clear that they intend to remain more aggressive. So I think a surprise to the market would be if they come in less than, and in my own personal opinion, if that should be the case, I think it would be a devastating move by the Fed and create panic to get out. Because inflation is for real, inflation is pushing pretty hard, and the Fed seems to be a little bit behind on getting a strong grip on it. So I think they're going to try to make up for that. The additional surprise that I think could happen is that CPI core part of the CPI that we got last Tuesday was a shocker for people. But then again, it came back on Friday and not Friday, but on Thursday when we had the PPI final. And that showed a little bit of an easing on the producer level. So I'm like, okay, so somebody needs to ask why those producers are not lowering their prices to us consumers. And so that would be my question. So I don't know the validity or how strong that decrease in producer prices in some of their core areas actually is calming to the market, or actually is going to turn something around. Now, so having said that the Fed is coming, I would like to just go back around, and again, we'll start with Wally, on what you feel. Bruce, yes. And it's actually the June 16th low. But yes, right there. Yeah, I am definitely. In fact, that would be required because that June low is intermediate wave one. No, actually, take it back. The June low would be the end of the primary wave A, and it was an intermediate C wave. This is the intermediate wave one of a primary C wave. So what we got coming next, and this is intermediate wave 2, is intermediate wave 3, which is in play right now. That intermediate third wave has already broken below the low of intermediate wave 1. That was required for the count. But I definitively would expect at least, well, since we're talking about it, I'll tell you where my fibs line up. This is the minimum. This is the minimum for a primary C wave coming down off of the level that we had at 43.27. 100% is just where wave C would equal wave A. That the requirement would be that the C wave breaks the low of wave A, which is 36.39. So once that occurs, it has met that requirement, but then it's just too short. So we do have support levels down here that will hold, but I think that we have to put it together with what we're seeing versus intermediate wave 1, intermediate wave 2, intermediate wave 3, 4, and a 5. So it's understanding a little bit inside of Elliott that what really transpires inside of, I always point to this, it's not a B wave, it's a C wave, but it's green. So that means it's primary, and that's the degree that we're now dropping in a primary degree. So if we look at just that and we say what's inside that primary C wave down, that's going to be 5 waves of intermediate degree, of which we have 1 and 2. So we're in the third. Then we take one more step that under Elliott, his observations were that most often third waves are the longest and the strongest out of waves 1, 3, and 5. And if I'm looking for a 1, 2, 3, 4, 5, so the impulses are waves 1, 3, and 5. And wave 3 is normally the longest and the strongest. So that tells me, if I'm trying to measure it out, I'm looking for this wave to come down to, again, like that mentioned, you just mentioned 3,400. I would say yes, but that might just be the end of wave 3. Then we get a 4, and then we get a 5, and we're looking at down in here. Ultimately, the C wave, in my opinion, should find its support to complete. That's just the ABC, primary ABC, and should find its support somewhere between that level, 3158, down to 2711 quickly. And I'm going to give you guys time to expound on yours as well. I think it's going to be important. Under Elliott, when I'm looking for a correction where I think they can bottom on this level, it's multi-tiered. So the top position is a supercycle wave 3, and that then completed underneath it a cycle wave 5, a primary wave 5, and an intermediate wave 5. So those corrections coming off are also going to be a cycle, primary, intermediate being the smallest. It came in first. So, but that was just to form the A wave here. So now we've got the primary degree ABC, and that's the first ABC, which will drop down, and that'll then form the cycle A wave. Circled and bracketed markings, not coloring. Coloring is for kids. Actually, no, coloring is pretty important so that you can see the difference between them. Circling in brackets can be very confusing, and I don't have the means in which to put a circle on here. No, you're allowed to disagree, so which is fine. And the proper labeling, I will challenge you on. That's not the proper labeling. Proper labeling is nothing all by itself. So, but I respect what you're telling me. In any case, as we start to come off, I want to just go back and to put in the standard EWI labeling is not always the correct labeling, but that's okay. What we have is, I think, a very strong downside to come, and I'm expecting ultimately for it to come down here. That's where I expect wave C, primary wave C, to bottom out and then set the stage for an intermediate, a cycle degree B wave, which should be quite an expansive rally. So having said that, with the Fed's decision coming on Wednesday, since we're all looking for lower levels by Friday, that would suggest that the market will react to that, the ruling or the decision made by the Fed. What else in terms of the size of the decline that we're now looking at? Do you guys have a little bit larger view? Like I'm sitting out here on a weekly chart, and I can move it back to the daily chart, and you can see we get kind of limited. But if you were to move out to a little bit longer term picture, do you have some downside targets? And we'll start with Wally again.
Yeah, so I do think that we should, honestly, the very first target I'm looking at is taking out the lows of June that we had,
Right.
just like you mentioned earlier. So once that is taken out, then to me, it's a matter of how bad is it going to get? You mentioned that, the Feds are coming out this week. Quite frankly, I didn't even know that because, again, I don't pay attention to news. But I do know that big picture, you're talking about,
Right.
do you see things big picture? I usually like to go all the way up until the quarterly chart and just kind of see, where things are, a year from now, 2 years from now, because most of what we do is more swing trading for like anywhere from a month to 3 months, 6 months, kind of setups. That's what we're looking for.
Right.
And so, it has its benefits and, pros and cons, so to speak. But I like the pros in the sense that I get a glimpse into what the future can hold. It's not guaranteed, but I kind of get an idea for what it looks like. And so it's because of that back in January, we saw that, hey, something is wrong. We expect this market to drop for the next 9 months. At the time that I was talking about that, people were still, we don't see that. We don't see that. I said, well, let's talk in September and see where the market is. And here we are now in September, and it's okay, yeah, market is down, like we said. Okay,
Right.
so now I'm looking at this, and what I'm seeing from a bigger picture is, this market is likely to struggle at least until June of 2023. Okay, so
Yeah.
if that's the case, when we had that bottom in June, this past June, I said, well, we're due for a relief rally, and we should rally to about somewhere around 4,300 before we start seeing if anything changes. And so whatever rally we get between the June's lows to 4,300, let's take it. But then after that, watch for a reversal. And lo and behold, that's exactly what happened on the S&P 500.
Right.
Okay. So, and that was before the Fed said anything about interest rates or anything whatsoever. And so, quite frankly, it seems like whenever the Feds come out, it justifies the analysis that we had based on what we see that, price should go down. And so even if the Feds are coming out this week to say anything, my assumption would be that it will probably just help us get to this June low faster, sooner rather than later, so to speak.
Right.
So so to answer your question in a nutshell, I just say, look, we've had bearish patterns that have shown up for the last 4 weeks. Last week, Friday, we closed with another bearish pattern. And so I would expect that this week, it would be a continuation of this bearish pattern, which should probably bring us to the lows of June and lower.
Right. Okay. I agree, by the way. I agree. But then Wally and I tend to agree more often. And Marcus, how about a little bit longer term look besides the end of the week? What do you think as far as how low would you project that the market has the ability to get to or the potential of going to?
Yeah, it's kind of obviously that we see the June low 3 ticks. I think it's indeed the target we can reach. If you see the long term, if you go a little bit higher in weekly charts, so it's 3.6 is really obviously low, always low what we can see here. And the next stage is 3.2, 3,200. That's the next low. And it depends about the Fed decision on Wednesday. But If I can talk a little bit more frankly to you guys, then I say I don't care about the numbers because
I think, no, I like that because there's actually quite a few where it's like, yeah, the numbers are the numbers.
Yeah, exactly. The numbers. Numbers are completely neutral. It's just a number, nothing more, nothing less. It's about what the market is interpreting, and it's about how the market is going to act about the numbers. So there is no guarantee. So we only have to learn to work with the probabilities. So probabilities are no guarantee. So I don't care about the numbers. It's just interesting. It's fun. And maybe you are right when you say what happens if they don't raise up about 75, I guess. Yeah. So maybe they do just 50 pips. What's that? What's that? How is the market going then? It's just an interpretation. It's just guessing. It's kind of gambling. So, and with gambling and guessing and interpreting, you don't make money. So Richard Dennis, you know, famous trader of USA, said we don't make money with analyzing, we make money with buying and selling. So, and in buying and selling, you have to follow the rules. So, and I guess all of us, Wally, Michael, and you, me, we are, follow the trend on the lower side. So I see lower prices also. But I'm really afraid a little bit that we see much lower prices, 3,200, or next stage is 2,800. So because it's still a young trend, what I can see on my chart, in daily chart, for example, maybe Michael, you can switch to daily chart again?
Sure can, I'm sorry.
Yeah, then it's, if you can scroll out a little bit, that we see a little bit more, a little bit more. Yeah, exactly. So if you start at your wave C on the upper side, if you start there, and exactly, then you see the first move up to mid of August. No, not so far. There are two green candles in it. Yeah, exactly. That's the first correction. So that's the first trend arm, and then it's going down and to the low, where is your wave 1 and 5. So, and then we see the second correction. So actually we are in a very young downtrend. It's the first situation we can go short after rule number 1 of Dow How. It's you need a valid trend. And now last Tuesday, we had this valid trend in daily chart. So now it's the first opportunity to go short. And now we are lower than the last point, the last low of exactly there. So now we are working exactly this price. So there is already a hit. So we had the 70% already. So the 70% probability is already there. So now it depends if the big money want to play at this price level, if they want to buy or if they want to sell. So if they want to buy, then they need sellers. So, and they know that all of them, they know, okay, there's always a kind of breakout traders there. Yeah. And now you see 2 days in a row, Michael, you can see 2 days in a row, they let it happen that the price is falling through this price level and they're coming back with high volume. And now today we see a kind of reversal again. So this is the big fight at this point, number 2, but that does not mean that we don't see a trend continuation. Maybe it's just a game for maybe, I guess, until Wednesday when the
until Wednesday, yeah,
exactly. And then the big decision, and then the market is going in one direction. And I think we will see the probabilities are more. So a trend continuation is always more probably than a trend break. So and maybe it's a kind of game. So I think we could see really a long-running downtrend, and then we see much lower prices because. In my opinion, just this one, I think we will see much higher inflation rates. So in Europe, we calculate with 12% in March next year. So, and this is a kind of disaster. So, and we will have much way higher problems, bigger problems. Here, and this will have an impact of the market.
I agree. It definitely will have an impact on the market. I have found in our own country, we tend to not want to upset the market. We don't want to upset and start a panic and things of that nature. So I'm like, well, half a dozen of one, 6 of the other. If you don't tell people, they're going to get angry with you because you didn't tell them, so that they could be maybe a little bit more prepared. But I find it interesting because I do agree as well. Again, because I was trading in the late 70s and the 80s. And so I can go back and I have a little bit better understanding, I don't want to say better understanding, but I have a good understanding for myself on how inflation can get out of control, how high it can get, what the effect is on the market, what the effect is on the banking system, what the effect is on interest rates, and then what that cure is, and sometimes how painful that then becomes to actually accomplish. And so I have kind of found that we have at least 2, maybe 3 generations of traders that are now in the markets, and they're trying to figure out and trying to accept higher inflation, but they don't have a basis point on which they can go back and say, oh, this is what caused it before, this was the situation. It is not necessarily the same situation tick for tick, but there are a lot of similarities into what caused it. And it is actually, in my opinion, greater in terms of what our country and what our government had to do in order to pull us up out of the brink of disaster. So in other words, it's like back in 2009, we had a major financial collapse. And what created it? Well, it was like bad trades in the real estate sector, in loans, but it went deeper than that. And so now all these things are in place to probably prevent it. And essentially, what happened after is that after 2009, the federal government, along with the Treasury and the Fed, had to come back in and bail out General Motors, bail out airlines, bail out the corporate side of the whole equation because of what happened there. And so in order to do that, they took all this money and pumped it back into the banking system, and that's called cheap money. And then boom, we start to come out of that, and we start to rally, we start to rally, and the next thing you know, we're off to the races. What gave us a hiccup on that road trip was the pandemic. And so we had that tremendous slide, and then from that, now the government was tasked with not bailing out corporate, which they did end up doing partially, but they needed to bail out the citizens who are now being told that they had to stay home and they couldn't leave the house. So how are we supposed to get money? How are we supposed to buy our groceries? How are we supposed to do all these different things, et cetera, et cetera? So here steps the government back in. And I don't remember, I think it was, what was it, $800 billion. So we didn't get to $1 trillion in 2009. Well, now we had enough going on where we had to come up with trillions of dollars, several tranches of what, 3 or 6 or 12 trillion. Okay, I will. So that I think has put a whole different spin on how deep and how far this should go that I don't think they'll understand. Now, on an intraday basis, would I be short or long? Are you asking me if I would have a bullish or bearish bias on the market? Some live trading. I don't do live trading on this particular program. When I'm doing my own, I will show you live trading, but I don't do live trading here. And that's not the purpose of this program. But in any case, what we can take a look at, would I be long or would I be short? I would be short. And that's the question. Let's just go around. Wally, would you be long or short now?
Let me switch over to intraday chart just to see what's going on there. Give me 1 second. And, even with that, so you have to determine, like, are we looking at a 5-minute chart, 10-minute chart? All right. That is going to make a relative difference.
Do you want to share your chart, Wally?
No, that's fine. I mean, if
I got a 5-minute chart right here.
Yeah, go to a 5-minute chart, and let's just see what is showing us right now. So at the very end of that, we can see that things are beginning to roll over. So if the question is, would you go long or short on this 5-minute chart? Short is what I would do, because you can see we have almost kind of like a double top at that swing high over there around the 3,900 level, slightly below that level. And then you can see that, it's already closing below those moving averages and stuff like that. So yes, if you were in a 5-minute chart as of right now, yeah, I would say short would be the position. But again, that could change if you were looking at a 10, 15-minute or 30-minute chart. So the person that asked that question, hey, let's see some live trades, is like, that's a vague kind of question to ask, because again, it all depends on what type of trading you do. So
Right.
I understand you want to see some live trades, but again, you have to be aware that everybody trades intraday differently. If we're looking at the tick chart, you'll be seeing something completely different too as well. But yeah, based on this 5-minute chart, lower is what I would say.
I don't think it's such a bad deal going low at going out at 38.95, but now I'm going to just go one more step further. And as Marcus was referring to when he gave his intro, rules. And Wally also talked about it, and I talk about it also, but not necessarily in this particular framework. But rules are important. You can judge any service based on live trading. Wow. Okay. I don't blame you on that, but let me ask you, do you trade based on somebody else's opinion, or do you trade on your own opinion? And do you have trading rules? And do you follow your trading rules? And can you state what your trading rules are? What engages you to go into the position? What is your target on the position? And where are you willing to get out? You pull your own trigger. Okay. So I would like to move on and discuss a couple other factors in here. And one being that the Fed's going to meet, and we pretty much are pulling in that people are, yes, you are fully responsible for your very own trading. I agree with that too. And that's always wonderful. But moving on, I want to talk about the bonds and the Fed on Wednesday, and how, if any of you got either, Marcus or Wally, if you actually track the bonds.
So I don't necessarily track the bonds. I'm more focused on stocks, and maybe, sometime before we end today, I can even just share some of the stocks that I'm recommending to my subscribers, just like, hey, short these stocks over the next couple of weeks because we expect it to go lower. And so again, we are more swing traders. And so a lot of the positions that we plan on putting on today, tomorrow, pretty much this week, is geared to expect things to drop over the next 2, maybe 3 weeks from now. Okay. And so, when we get to that portion, I'll share some of the trades that
Sure.
we are looking at, and that says, these are the ones that we ourselves are getting involved in this week.
Right. So, and Wally?
Sure. You want me to share those now?
Sure.
Oh, okay. So one of the first ones is General Electric. If you can throw on the chart of General Electric and go to the weekly chart of General Electric, I'll show you some things that we're beginning to see on General Electric.
Oops, it went, hold on. Enter.
Now,
on a weekly chart?
On a weekly chart. So all these trades that we're looking at right now are stocks that we believe are going to go lower, probably take out the low from June as well. And so you can see this chart, just looking at it right now, at the very top, right before it started trending down, that red candle right there, exactly. Anybody who understands candlestick signals would know what that is. That's a bearish Arami signal. So we had a bearish Arami signal right when we expected market to top out around that 4,300 level on the S&P 500. And so to see General Electric do the same thing right around that point, and then you will notice that week after week, we've been having pretty much lower highs and lower lows. But more importantly is the fact that we've been setting lower lows. And in a downtrend, that is something that we pay more attention to. We pay attention to the fact that we're having lower lows more than the lower highs in a downtrend. And so as we're seeing this happen right now, again, we understand that the Feds are going to be coming out right now. This little bump that we have today, this green candle, that's a very typical thing that you'll see if you trade on a week-to-week basis. It's like the market has to kind of form some type of a high before it falls back down again. Okay, even if it gaps down at the beginning of the week, you will see a pullback because every candle has to have a high, open, close, high, and low. Correct. And so usually those highs are set with that little wick right there. So when we see what we're seeing right now, this is our opportunity to say, hey, The green candle that you're seeing in General Electric right now is pretty much forming the wick candle that you'll see. And so we would be expecting this to turn into a red candle by Friday. And when that happens, you'll see that it has a red wick at the top. But again, not just this week, but going into earnings, we have earnings coming up sometime in later October. So we expect this to affect General Electric going into earnings. And like I said, by the time earnings times come, we expect it to have already hit that low, probably close lower than that. So that's one stock that we're looking at. Another one that we're looking at is Macy's. If you go to Macy's, same time frame, weekly time frame, Macy's did really, really well, through this rally that started last year, did really, really well. And if you go to the monthly chart, if you don't mind, I think you'll see this even better on a monthly time frame. So if you go to the monthly chart, notice how we had that big rally from 2020 all the way up, and then we had that very big long wick right there. That to us, I teach this concept called a top-in pattern. We call it selling pressure. When that happens, I have a whole course on that. When that happens, chances of the stock dropping all the way back down to the beginning of that trend is very, very high. Okay, and so there's some requirements, some rules, like you mentioned earlier, that we need to see. And Macy's have already fulfilled all those rules. And so at this point, we say, wow, look out below is what we say for anybody who's in Macy's. We are not long in Macy's whatsoever. Are there going to be some weeks where we have positive weeks along the way? Maybe. But our plan is to hold on to this as it takes out the low. The other thing you'll notice is from the highest peak that you can see back in 2015, we've been forming lower highs and lower lows. So we have that swing high up there. And then if you go back to, as you see right there, that's a swing high, but it's actually a lower high. And then go to this most recent selling pressure that we had, that's another lower high. And so again, the trend is just, you can even if you connect that high right there with the high to the left of that, you can see a very, not that high. I'm talking about the one on the right where we have the most recent one that we just had, and then connected to the most recent swing high on the left-hand side, right there. Perfect. Okay. And then if you drag that out a little bit more, you'll see that, hey, that right there just seems like, a perfect channel that is just setting itself up to go lower highs, lower lows. Okay. And so I believe Macy's is a stock that over the next month, 2 months, 3 months, it's just going to continue going lower. And it suits what we do. It suits what we do because I don't have to sit in front of a computer every day. We take on some short positions, come back at the end of the week, come back at the end of every 2 weeks, and watch and just manage this thing as it keeps on going lower. So I'll give you a third one, and that is TLRY, the marijuana stocks that a lot of people were so excited about in the past.
What's the symbol?
TLRY. TLRY. This is more of a penny stock at this stage. We don't really necessarily trade it, but just because I know a lot of people talk about it and stuff like that, you can't even see the chart with how bad it is. So you probably have to go to the weekly chart. Maybe, even you probably have to zoom in just to make sure that you can even see this one a little bit clearer. But again, another stock that we're looking at this, again, full disclosure, I don't plan on trading TLRY because it's below the price range that I would typically trade. But I do know that there are other people who don't mind shorted, stocks like this. But we're looking at this and saying there's no recovery for this at this time, anytime soon. Would this stock go down probably to $3, maybe $2.50? Very, very likely. So those are just a few stocks that we look at that we plan on telling people to pay attention to this week.
Okay. Marcus.
Yeah, maybe we can switch to euro dollar. Is this possible?
The dollar index?
No, euro dollar, the currency, euro dollar.
6E.
Yeah, 6E. Okay. Yeah.
Oops.
Because I see there's a great chance. Would you, if you don't mind,
I'm going to take up all the fibs for you. because they may not apply to anything you're doing. There. Okay.
If you don't mind, if you can switch to Heikinashi, is this possible?
I can. And
Really
that's going to be
style. Exactly.
chart style. Hikinashi.
Oh, lovely, lovely. So, and now switch please to 4-hourly chart because there's a great chance. And here we can see and give a little bit more scroll in. Exactly, yeah. So there's a wonderful chance in euro dollar, for example, because as you can see, we saw, a little bit more, a little bit.
Okay,
Yeah.
you got it. How's that?
Lovely. So there's start. We start with trend drawing at the low on the left. It's Monday a little bit. No, left on left side. Left. Oh, yeah, exactly. No, a little bit left on the left. It's Monday. On Monday.
This Monday.
No, the previous Monday. Yeah,
This
exactly
Monday.
there. Yeah, exactly.
Okay.
There. So, and if you know how to draw the trend in a logical way, because it's just the visual, the visual legacy of the order book, nothing more nor less. So, and then you start with the trend there, and then you see there was a high, and then it's going down. Exactly. And then we had a low 1 week later, at Tuesday, no, 2 weeks later, we had a low. Yeah. And then it's going up, really far up, and then low. And this is my first correction on the lower side right now. Exactly. This kind of stabilization. This is trend on number 2 with Heikinashi. So we had a great chance, a couple of, I guess, last Wednesday, there was a beautiful chance to go to buy euro to dollar, to go long there. And now you're in profit. So, and the probability is 70% that we see 10.2, the last high, that we see this. It's a probability of 70%. And then maybe we see a new trend. So because it's a really, really, in 4-hourly chart, it's a really young trend. And there was a great chance to go long. And then maybe we can see a trend because the fair price in euro dollar in 4-hourly chart, it's don't be afraid, but the fair price is 115. The fair price of in 4-hourly chart by euro dollar is 115. So we are really, really damn cheap, exactly in 1 hour by one contract. So there could be a long running uptrend right now. So therefore I taught my students, we went long last week already. So we are in profit right now, and the stop loss is in profit already. So nothing can happen anymore. And now we are speculating and calculating of the 70%. And this is a great chance. And if you are not in, for our listeners or viewers at the moment, you are not in, then there's enough space because the last 0.2 is up at 1.02. There's the, exactly, that's the last point, the high point. We call it 0.2 in trend drawing. So you have enough space. So you can still set a pending order, stop buy on the way up, and then you have can still speculating of this probability of 70%, and then give the responsibility to the market, make the trade safe, trail the stop into profit, and then let it go. So, and this is the real challenge in trading. Yeah, stick to the rules under all circumstances. And by the way, guys, I'm a really strict teacher in my community, and if someone is breaking the rules, I send him a cactus. So I'm a cactus gardener here at home. So, and everybody who breaks my rules get a cactus from me, and he have to grab into the cactus every time he fail, and he make a misdeed, and this hurts a lot. So guess who is not breaking the rules?
Right. Right.
So that's the point. But if it hurts, then it works. So, and this is
right.
what I teach my students. So, and then this is why trend following is so unpopular, because once you are in by sticking to rules, then you give the responsibility to the market, and then you say, okay, market, now show me how many trend arms you can get me. So, right. And then you have to sit on your hands and you have to do nothing. And this is so hard for young traders, or especially for traders at all, to sitting on their hands and do nothing and let the market decide how much money you will get with this single one trend, with this single one trade, because one trade, who cares? At the end, It's the
Right.
bunch of the trends, the trades who give you the money, not the single one. It's just sticking to the rules. Now, this is a perfect example in 6E in euro dollar, how trend following is working, by the way.
How trend following is what?
How trend following is working in
Oh,
this.
it's working, right.
It's working, sorry. It's working. Yeah. So entry in the second trend arm when the trend is really, really young to get a cheap price. This is the behavior of a trader buying cheap and selling expensive. So, and this is the trend arm number 2 in euro dollar. So buying cheap was happening last week and now you're in, and now we let it go right now. And this is the point what we have to learn, to let it go and let the market decide how expensive it can be in the future. And this is not my decision. It's the decision of the market, how long the trend will go. That's the point.
One last thing I want to ask you, because we know how tightly they're tied, the price of gold with the price of the euro dollar.
Yeah.
Do you have any comments or views on that? This is the gold chart again, the 4-hour.
Yeah, we are strong short since days, since weeks already. So we went short at, I guess it was 170.09 in 4-hourly chart. It's in daily chart, you can see it very clearly. So that where is your wave C? It's the beginning of the downtrend. And you see this lovely downtrend. It's really lovely. So there was the perfect chance at the price at 1,880. There was the first chance to go short, or around about 8,840. Round about, it was a great chance to go short. And now the trend is still short. It's still short, and there is no sign that the price is going up. And in 4-hourly chart where we are trading, most of us are trading daily chart and 4-hourly chart. In 4-hourly chart, there was a great chance for 2 weeks ago to go short, and the trend is still running. And now we are still standing on the sideline and let the market decide how much money we'll get with this short. But I think gold is going still short.
If I may add to that too as well, Michael and Marcus, if you, from our view, which is, again, more swing trade, longer term, if you go to the monthly chart on gold, you'll see, just like what Marcus said.
Hold on, let me go to the right one. That one's better. Okay.
Yeah. I don't know if you can zoom in from 2020 until now. Just zoom in
from that 2020 until now.
Until now.
Okay. And oops, come on. Once my system it's going to do something weird. Give me a moment.
Yeah, I see. But no, while you're doing that, I totally agree with what Marcus is saying. Anybody who's into gold should be into gold short. And I like particularly what Marcus said. He said strong, bearish on this, and I think anybody, we typically hear this notion that, gold is a safe haven, right? Maybe it used to be before the financial crisis of 2008. I don't know, but my experience shows that no, it hasn't really been, not at least from the chart perspective. And that double top that you see from even just the labels you have over there, number 3 to B at the top right there. I mean, that is a dead giveaway that gold is going to suffer. And because this is a monthly chart, I just don't see gold recovering anytime soon, okay? Anytime soon. And so the fact that Marcus is shorting this on a shorter time frame and he's strongly shorting this, we're doing the same thing. It's just that we just say, look, we shorted this start back in March, and it's let's just wait until we see it bottom out. And so we've been short since March. We just don't go in every single day, in and out. We're just okay, fine. Since March that we've been shorting, we're just holding on to it. And but I totally agree 110% with what Marcus says. Nobody at this stage should be even thinking about buying gold.
Yeah.
Wow. Yeah. We don't have enough time because I was going to add mine, but that's okay. I really appreciate tossing gold up there and you guys giving some excellent information on gold. Thank you both for doing that. But I see that we're going to be running out of time here. So starting again with Wally and then Marcus, again, just tell us about your company, if you have something that you need to add, and how people can get a hold of you. and then we're going to turn it back over to David.
Sure, I'll make it very brief. Info at Right Side Trading. Our company is called Right Side Trading. So just think about the right side of your chart, rightsidetrading.com. If you go to our website, you'll see a bunch of our courses on there. If you want to get in touch with us, just email us at info@rightsidetrading. Again, most of what we do, we are suited more for people who have a 9 to 5, who cannot stand in front of the computer every day. Preferably people who don't mind placing trade once a week. Okay, that is what we do. And because what we do is we teach people how to see charts longer term over a quarter, 2 quarters, and then place your trades and then just learn how to manage it each week on the weekends when you have some time off for like about an hour or so. And that's what we do. But if you're interested in the kind of stuff like that, you can reach us at info@rightside-trading.
Great. Thank you so much. And Markus.
Yeah, first of all, I want to say thank you that you're having me here on this show, and it was a great pleasure for me. So if you want to have more information, the homepage is dowhow-trading.com. And if you are interested in kind of logical trading, because trading is a game of math and probabilities, which we are working with pure logic. And logic, by the way, thinking of logic and thinking in a logical way is the only way to control emotions. Because personally, I hate it when presenters or when you can hear in a webinar, you have to cut off or you have to turn off your emotions in trading. This is stupid. That's not possible. You're a human being. You cannot turn off your emotions. You're not a robot. You don't have an emotion chip you can turn off. You can pull off your body and then it's working. It's not working. So you are still a human being. And why 90% of all traders fail is about emotions. So because they throw away the logical way of thinking like they do in normal life. So we have to bring it back, the way of logical thinking. And to be honest, I don't care what you do outside there, as long as you have a teacher. If you take Michael as a teacher, or if you take Wally as a teacher, the main thing is, if you want to cut the way to your own trading success, in heaven's sake, take a teacher. Take a mentor like you used to do outside in a normal life too. So I don't care if you take Wally or Michael, or maybe you think it's me, I could be a good teacher. Then go on the homepage and send me a contact formula. Okay, send me contact. Let's talk about trading. But please, in heaven's sake, take a teacher, take a mentor, and let lead you to this process of trading. Then you have a really, really great chance to become successful in trading. And by the way, don't forget, you have just this only one life. This is what my spiritual teacher taught me. Markus, he used to say, Markus, you have one life, one single life. And you don't know when is your last day. You don't know. And all of us, we know, traders spend and waste so much time with trading by hunting the Holy Grail, by figuring out the illusion, becoming rich tomorrow. This is not happening. Never, ever. So if you want to spend precious lifetime, take a teacher like Wally or Michael, and please then learn your trading stuff. And then you have a great chance to become successful in trading.
Thank you very much, Markus. And thank you for that kind word. And again, I'm Michael Filighera. I am with tradershelpingtraders.com. And you can always email me there and it will get forwarded over to me. Or you can also email me at michael@mjf1partners.com. And I always answer questions. And again, I don't want to call specialty, but my analysis tool is primarily Elliott Wave and Fibonacci. And so I spend a lot of time, and I have spent well over 30 years. And so I tend to stick to the original work of R.N. Elliott and try to make as few adjustments, but there are some adjustments that need to be made because the markets are now algorithmic and quantitatively controlled. So I'm going to end it there. I'm going to say thank you very much for allowing me.
Yeah, absolutely,
David. And I'm turning it back over to you.
All right, thanks, guys. Yeah, that hour went by fast. So, ton of good info today. So, yeah, thanks for being here. And just a quick reminder for everyone: be sure to subscribe to Timing Research on YouTube or your favorite podcast app for instant updates when I post new episodes. Also, you can just go to TimingResearch.com and there's a post at the top of the page that will become the archive for today's event. Also, if you have not seen this yet, we had a Fibonacci and Elliott wave event the week before last, and all of today's guests did presentations on that. So you can just go to Timing Research and scroll back a little bit, and you'll see the archives for that full event. We did 30 presentations over 3 days, and so a ton of good info there, and those are permanently available on Timing Research to review anytime you want. So I just want to thank my guests again for today. Markus Gabel of DowHow-Trading.com, Wally Olopade of RightSideTrading.com, and Michael Filighera of TradersHelpingTraders.com. Thanks, everyone.
Thank you.
Thank you very much. Bye.
Thank you, guys. Take care.